Hey, it's Mark Yagi, and I want to talk about Tesla today because Tesla's got three big news items coming up in the next 3 weeks. So the first one, today is October 1st. The first one coming up is inventories. Now, China just came out with some amazing inventory numbers, and so for the first time in 4 quarters, Tesla just might report some really great growing inventory numbers because of Tesla. I know there's slowdowns in Europe. There's a little bit of slowdown going on here. But I think overall, everybody has dialed back their expectations for those inventory numbers, so they may surprise to the upside. I don't know. I'm just trying to play Tesla for the long term and haven't been doing a very good job of it, frankly. But, you know, Tesla's one of those stocks that if you believe in the story, if you believe in Elon Musk, you believe in what's going on, eventually it's got to break out. The stock price is like the same as it was 3 years ago. And the company is doing 4 times the amount of sales and making all this money and got all this cash. So it's really, to me, a suppressed stock, and it's just a matter of time before it starts going. But that's the first event. The second event is going to be the 1010 Robotaxi reveal event, which I think could be a total game changer for Tesla. It could be a sell the news kind of event, buy the rumor, sell the news. And, you know, Elon Musk has a tradition of being able to not meet those deadlines that he puts out there for himself. But the reports that I'm seeing on full self-driving are that it's amazing, and it's up to more than 99% of the time. You don't need to touch the steering wheel or the pedals. The car handles itself, and it's up to like 1.3 million miles it has an accident versus a human that has an accident about once every 200,000 miles, just to round it off. So that's the second event. The third event is earnings coming up in a couple of weeks. So we've got like one event every week for the next several weeks, and Tesla's in play. What that means to us as people who write covered calls for passive income is that we are looking at volatility. So if you're looking at the stock price today, I'm going to throw it up here in just a second. It is volatile. Take a look at this chart. So you're looking at the daily price, right? And you can see that Tesla over, the past several whatevers is pretty flat, right? It's not up, it's not down, it's up and down, right? If nothing else. And you can see it's basically flat. And so going into this area here, there is a cup pattern. I drew a little cup there. You see that little cup pattern in gray? Or you can look at it as consolidation from 271 down to 182. And that is roughly a consolidation area. But that 271 is the breakout area, the official breakout area, if this is a cup or a consolidation. And it's probably the secondary breakout area if it's not a consolidation. And I think it's a handle. I've been saying, if you've been watching any of my videos, that this cup is not going to just end up as a cup. It's too weak coming up the right side. And so that weakness is going to get sold off here. And look at today's candle. Today was down 12 bucks at one point, which is 5% or something like that. And now it's recovered a little bit. But that's a decent sized candle on about average volume, not high volume. High volume would be much more of a concern. So I think here's what's happening. It's making a cup and a handle, and that handle can go down to about 15%. I think with all the news coming out, I think we're kind of near the area where the handle is going to be made. Now, just so you know the psychology of a trader, the handle is where some of those weak holders get shaken out, right? They're like, oh my God, I made money from the stock at 202 and I ran it all the way up to 260. I better take my profit. And they're the ones that are taking their profits today. And they don't want to hold into the inventory numbers, or they don't want to hold into the 1010 Robotaxi reveal, or they don't want to hold into numbers. So they're just like, let me get out and take my money off the table. Those are the weak people. Those are the people that can't stay in the stock long term. They're just in it for a quick buck. And they create this little handle here, okay? Now, the top of the handle right here is where the stock should break out. That's the way that probabilities show on these things. So if it does form a handle, which is not completely there yet, one day does not a handle make, we are going to be looking at a handle, a breakout point, which is right around what, 250, I don't know, let's call it 260, okay? So 260 will be the breakout point. So you want to be maybe accumulating it into strength coming into that breakout point. Today is not that point. We're getting a sell-off right now. You see it at down $9. But it does set up a huge opportunity for making money on this thing and using covered calls. So let me show you what that looks like. So here's the option chain, and I set it up to be 9 days out, and the stock is right now around 252. So what we're going to do is we're going to pull up here and we're going to see what's available to us. Now, I'm bullish on the stock going into this quarter, going into the 10-10, going into this inventory thing. So I want to play the stock to the upside. When I play the stock to the upside over this 9-day trade, I'm going to look at the stock out of the money. Now, I don't always trade out of the money. There's a big time. Most of the time, I like to trade in the money. But on Tesla, right now, green market, good stuff going on, I want to be a bit out of the money. So I'm skewing toward the upside. Now, there's still plenty of juice out there for somebody that's looking to be bullish on this. So if the stock's here right around 252.50, let's call it, right? That's just slightly out of the money, very little bit out of the money, but let's call it at the money. You get $15 for this for 9 days. In other words, you get $1,500 a contract. Now, there's a way that you could do this using synthetics, but I'm not going to go into that on this video. You could see some of my other synthetics and leaps videos around, and maybe I'll link to one right at the end, so you can just go right on to watching that video. But leaps are a really great way to get more leverage if you think a stock is going up. It has its risks, though, so make sure you know the risks to the downside. But what I'm going to do is I'm looking, since the stock is at 252, I'm looking to make some good money on this, and I'm going to go out to, I think the stock could go up to that breakout area of 271, right? And it could go higher from there, or it could have a flub breakout. Now, I don't know, and it all really depends on the volume going from 260 to 270 that's going to dictate it. But here we are sitting, at 252, so I'm a bit of a ways away from that. But what I'm going to do is I want to pick up some free money for the next 9 days. So I'm going to say I'm going to sell the 270s, and I'm going to pick up $820 per contract. Now, here's the beauty of that. If the stock goes up another $18 from 252 all the way up to 270, I'm not only going to get the $8.10, which is really the whole point of this trade, but I'm also going to get the appreciation over the next $18, $19, $20 until it gets up to 270. So I could end up making a capital gain on this trade of, let's call it $20 per share, or $2,000 on 100 shares. Plus, I'm going to get $810 per contract. So you could turn this into a real money-making thing. I like to look at it just for the income. And if I were just strictly looking at it for the income and I didn't care about the upside, I would probably sell these 250s for $14.55, or I might even go in the money for $14.25. But in this case, I'm looking to do the 270s. I think that's the sweet spot for me. And if you like $805, you can take a look at, I've left the little bubble up there to the right, it's a 10% return if it goes up or above 270, right? 280, you still make the same amount of money. Annualized, that's 432%. That's pretty darn good annualized, right? But of course, it has to be done over and over again. It always has to be in the money, and all the hypotheticals and the assumptions that you have to make. But that's where I would trade this, right? I would look at the Tesla at 270, and in fact, I have the 270s. So, but if you're a little more conservative, maybe you trade right here near the money, 250, 252, pick up 1462 in the money. And that gets you still, if you look at the bubble on the right, 5.83% on the trade and 236% annualized. And since it's got a delta there of 54%, you got a 54% chance of making all that juice in this trade, right? You're going to get all the juice, but having this trade turn out the way you design it. So that's how I would look at this trade. So let's put real numbers to it. Every $25,000 that you would buy, because each contract is worth 100 shares. So this would be $25,100, right? So you invest $25,100, and you would, if I do the 270s, you get $800 back. Okay, that's a pretty good return. And let's figure out what that is. So I just did the math, and it's if you divide 25,000, which is your investment for 100 shares, and you get back about $800, it's a 3.2% return just on the juice alone. Plus, you still have that potential upside potential. Now, you also, let's look at the downside. You get $8 worth of cushion. So this stock could go down from where it is now. Right now, as we're looking at it, it's around $250.75. It could go down $8 or $7.90 on the screen right there, and you still haven't lost any money. So you get a little bit of downside cushion, you get the juice, which is a lot, 3.2%, And if it goes up all the way to 270, you end up picking up 10% on the trade. That's how I would do this. Let's say you did $250,000, you did $250,000. You would be picking up $8,000 every 9 days, right? So, $8,000 every 9 days is pretty good on $250,000. But Tesla has its ups, it has its downs. It could miss numbers, it could miss flub on the robotaxi event, it could miss inventories. There's a lot of things, and that's why Tesla pays you so much in income. If you can look far down the road, then you can say, you know what? Tesla is going to pay me that money down the road. I'm going to just sit here and collect my juice. It's going to go up. It's going to go down. I've got to be able to hold on for dear life, right? HODL, as they call it in the Bitcoin world. And you got to hang in there for Tesla through thick and thin, knowing that it's going to have a lot of volatility. It's very, very difficult to do. This is an aggressive trade, even for covered call writers who are generally on the conservative side of traders. So don't do it unless you can handle the upside and the downside of Tesla.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.